Hi everybody, welcome to episode 2 in a series of videos where we talk everything property and finance. My name is Mohammed Ahmed, I'm the founder and managing director of Pinnacle Finance UK, and today what I want to talk to you about is the home buying process. Okay, now why does that matter to me so much? Okay, the reason why it matters is it goes back nearly 20 years ago when I bought my first property. Okay, and the experience that I got as a customer when I went into the bank at the time to buy the property was, to put it politely, poor. Okay, and I thought to myself, there's got to be a better way to explain this. And not only that, even when working in the in corporate banking, I realized that there's so much more that the customers don't really know, they don't understand, they're not explained, perhaps because there's high targets, which we had very high targets in the banks, and you couldn't always speak to clients, and after you saw them once, it was very rare that you saw them again, maybe even spoke to them again. And I thought, this can't be it. And I thought, and so for me, it's something very personal to me. I hold it very dear, and that's why when speaking to my customers, I place great emphasis on it. And also my consultants as well, I ask them to place great emphasis on explaining the home buying process to customers, because I believe it's crucial that they understand what they're about to do. Because buying a house is not like buying a phone or a tablet or a car. Buying a phone is by far the single largest transaction you will ever make. So it's absolutely important that you get it right, okay, and you understand, okay. It's the old saying, lack of communication leads to frustration, which leads to people pulling out, it leads to deals falling through. And the reason why there's lack of communication or lack of understanding is because the consultant hasn't explained the home buying process to the customer, or really, given them the expectation of what they should be doing or what they should be expecting. So when none of that happens, it leads to a lot of frustration, and we're not about that. Okay, so that's why I wanted to explain the home buying process, because even if you're a serial landlord or a property investor or developer, or you're looking to buy a house for the first time, I think this video will help a lot of people understand the fundamentals of buying a house. Okay, so what we're going to talk about today in this video is the process, the staging, okay, and we call it the 10-step home buying process. Now, big shout out to my old boss Simon Dunkley, who taught me everything that I know today. Going back to my days at Countrywide, he took me on and really gave me the opportunity. I'm talking 15 plus years ago. So, Simon, thank you so much. Okay, now let's crack on. First things first, let's talk about the step 1. Okay, step 1 is the client comes in and we go through the initial consultation, and what we're trying to establish here is there a case here? Okay, now if a client comes in and they say, well, I'm unemployed and I've got CCJs and I've got no deposit and I want to buy a house for £300,000, well, it doesn't take Einstein to figure out that's not going to happen. Okay, and believe you me, we've had scenarios like that where clients have come to us with real unrealistic expectations, like that's not going to happen. So the whole point of step number 1 is to establish, is there a case here? Can we help the customer? Okay, so the way we do that is we complete a fact find, where we get all the information about our client, checking their affordability, we go through what assets they have, what liabilities, their income, their expenditure, and just get a real understanding of who we're dealing with. In banking, we call it Know Your Customer, okay? KYC, for those of you who are in financial services. Then we go through the costings. So it's important to understand as a customer, what's it going to cost me? Often people think, right, I'm buying a house for £100,000, for example, I got my 10%, £10,000, great. Yes, but not necessarily, because there's other costs involved. Sometimes you have to pay for a valuation fee, and on the back of that there may be additional reports that you may have to pay for example, a structural report or a timber and damp report, or so on and so forth. There's broker fees involved, there are solicitor fees involved, there's potentially stamp duty involved. So there's all these other things that are often overlooked. So we go through that to explain to them, these are all your costs that you're going to have to incur when buying this house. Okay. Once the client is fully informed, or at least as much as they can be, then we say, right, if you're happy to proceed, sign terms of business, and then we move on. Okay, we collect all the data, passports, driving license, bank statements, payslips, credit reports, proof of deposit, etc., and we say to the customer, right, thank you very much, off you go. Which then leads us on to step number 2. Step number 2, what we do is we conduct a full market research to find the very best deal for that customer. So often we get people come to us and say, well, such and such got a mortgage from such and such, and they got like 3.9%, blah blah blah. I'm like, well, that's great, but obviously everyone's situation and circumstances are very different. So we make it very clear that the deal that we're going to get you is going to be the very best deal based on your individual circumstances. Okay, that's what we do. Once we find a suitable lender, we check that it fits criteria, if it's policy, and if it's affordability, then we conduct a credit check, sometimes a soft check or a hard check, depending on the lender, to get what we call an agreement in principle. Okay, with that will allow you to go to any estate agent and to view properties and even make offers. Okay, so step number 2 is to get the agreement in principle. Okay, now step number 3 is when we get the client back in for our second appointment now. So it's step 3, but it's the second time we're meeting the customer. Okay, in this meeting now, what we're doing is we present to them the agreement in principle. So we say, well, based on what you told us, based on what's important to you, you said you want a 25-year mortgage, you said you want a repayment, you said you want a fixed 5 years, blah 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 blah. This is the very best deal that we found you based on what you want and based on what's available to you in the market. Okay, here is your agreement in principle, which tells you how much you can borrow. Off you go, you can start going through and start looking at properties and making offers. Okay, well, we don't stop there. Okay, we go a bit further. We then now we know they can get a mortgage. Can they actually afford it? Okay, it might seem like the same thing, but it's not. Getting the mortgage and being able to afford it are two very different things. So what do? We complete a detailed budget plan. Okay, so we look at what's coming in, what's going out, or what's going to go out. Okay, in terms of your mortgage and life insurance and building insurance, council tax, gas, electric, water, mobile phone, food, holidays, clothes, etc., etc., etc. Can you afford this house? Okay, because there's absolutely no point them getting a mortgage and then 6 months later they default and they get repossessed. Well, no one's going to happen with that. Okay, but also buying a house should not mean that you should stop living. Obviously, you understand that there's going to be some changes that you're going to have to make. However, what we don't want to do is for the client to stop living their life. Okay, we want them to continue living their life as much as they can while still being able to afford this house. Okay, and then thirdly, what we do in the same meeting is we look at what provisions they have in place should the worst happen to them. So what we're trying to establish here, well, what happens should the worst happen to you? Okay, what's going to happen to the mortgage? What's going to happen to the house? Who's going to look after your partner and your children? Who's going to pay for the mortgage? Who's going to pay for the bill? What if you fall ill? What if you lose your job? What if you have an accident? Okay, so all these different provisions we look at. Well, what does the client currently have in place? And then we identify any gaps and establish what's important to them, so we know. Okay, well, you don't have this in place. For example, you don't take out a mortgage for £100,000, for example, but should the worst happen to you, you've got nothing to pay the mortgage on. So we could look at maybe life insurance, for example. So we go through the budget planner, we establish their needs on what provisions they have and what they need on their protection portfolio, and then we obtain a budget to say, right, this is how much you want to be spending for your mortgage and all the other bits and pieces which include your policy. Okay, and that then concludes step number 3. Okay, then we move on to step number 4. Well, this is where we get a little bit different. Okay, where we, as a clinical finance, we get a bit more inclusive and a bit more personal with our clients. So step number 4 is the clients go out and shop around and find the property. As I mentioned, this could be any estate agent anywhere in the country. We deal with clients all over the country, from Glasgow down to Southampton and everything in between. So it really doesn't matter where you're buying or which estate agent. Okay, we can deal with them all. Okay. What I say to my clients is, when you find a house, okay, again, this is the process that we take our customers through, the journey that we take them through. Not every consultant or broker will work in the same way. Okay. So what we then do, once we find we tell the client, go and view properties, and we say, once you find something that you want to make an offer on, before you make the offer, call us. Okay. What we do three things. Number one, first of all, we find out, right, well, has the agent marketed it accordingly to the market rate? Okay. If the houses are going on the market for £120,000, for example, but they've marketed it for 180, well, we already know they've over-marketed it. It's overly priced. So, we kind of help them do some research on that. Number two, how much do you offer? You don't want to offer too much, and you don't want to offer too little. Okay, because you could lose out if you offer too much, or you could come across as being too cheeky if you offer too little. So, how much do you offer? So we help our clients in guiding them on how much they should be offering. And thirdly, we actually make the offer for you. Okay, so two things. Number one, we're more experienced dealing with the estate agents. Now, a lot of my estate agent friends are probably going to kill me for saying this, but estate agents are notoriously trained to get the most out of you. Because don't forget, they work for the vendor. Okay, but their job is to get you the very most they can for their client. Our job is to get you the least as possible. So, they're trained negotiators, and so will we. Okay, we've had a number of years of training and negotiating, so we'll get you the very best deal. Also, coming from your financial advisor adds a lot more value a lot more weight to your offer. So the agents will know that these guys are serious. They're not mucking about, because their broker's calling us to make the offer for them. The chance of you getting approved suddenly just jumps up and goes higher. Okay, so step 4 is all about getting the house agreed for you. Okay, once we've done that, move on. Step number 5. Step number 5 is also our third meeting. That's when we meet the client for the third time. Okay, what do we do here? So now you found the house, Mr. Customer, great, thank you, congratulations, well done. So it might have been 2 weeks, it might have been a month since we initially went to the market and done some research. It could have been at the time that, I'm going to use any lender, Nationwide for example, was offering you the very best deal. But as you may very well know, deals and rates change every single day. So just because Nationwide was offering you the best deal 2 weeks ago or a month ago, doesn't mean that that's the best deal for you today. So we will go back to the market again, conduct research all over again, just to make sure that you're still getting the very best deal based on your individual circumstances. So now that we've established who is now offering you the very best deal, it might be the same lender or it might be a completely new lender. So we'll do that research again and run the credit checks if necessary with whoever it may be. Okay. Then we submit the full application to the lender. That's when we, then all the documentation, payslips, bank statements, IDs, all that sort of stuff gets sent off to the lender. Okay. At the same time, we then instruct solicitors. Okay. Now you're welcome to use your own solicitor. We always like to use our own panel of solicitors. There's not one particular firm that we use, but there is a panel of firms that we work very well with and have done over the many years now, where we have very good relationships. And the advantage of using one of our own solicitors, we always say, is that because we have that relationship, we can move things more quickly. Okay, and we know that they're going to be on the panel for the limit we're going to go with. Using your own solicitor, we don't know if they're on the panel or not for that lender, so we'll have to check that. And if they are, because we may not have a strong working relationship with them, we're going to be somewhat limited to how much influence we can have on that firm, and tell the solicitor, come on, get a move on. Okay, so we instruct solicitors, we submit the full application, all the paperwork gets sent off to the lender. Okay, and that in a nutshell, is step number 5. Also, what we do in step number 5 during the third meeting is, remember when we spoke about in step 3 during our second meeting, what provisions the clients have? So at that time, not only will we present to them the mortgage, but we'll present to them a package. So the package will include, right, well, this is your mortgage. You said, you don't have life insurance. You said that you want life insurance. It's important to you. So this is what's going to cost you, and the same for maybe critical illness and income protection and building insurance and so on and so forth. So we present to them the full package based on what they want, what they need, what we present to them. And then obviously we apply for all of those appropriately. So it's not just the mortgage that we're applying for, we're also applying for any protection policies that we may have discussed with the client. That sums up some of the step number 5, client goes up. Step number 6, what we do, this is where a lot of things are happening in the background now. Okay, so this is where the underwriters, and these are the people in the bank who decide yes or no if they're going to give you a mortgage. Okay, so they're assessing all the paperwork that we've submitted, so just to verify that everything that we've said on the application can be backed up with evidence. So, your name's John Smith, your ID says John Smith, great. You say you earn £40,000 a year, your pay slips reflect that, your bank statements reflect that, etc., etc. Okay. Once the underwriters have assessed all of that, they will then instruct their own surveyor to go out and conduct a valuation of the property. Now, I'm going to do a separate video to talk to you about the 3 types of surveys you can have: level 1, 2, and 3. Okay, I won't go through that now because it's quite in depth. I want to make a separate video on that. So please make sure you subscribe so you don't miss out on any future videos. Okay. So step number 6, the surveyors go out and do a valuation. The key thing they're really looking for on a basic mortgage valuation is, number 1, is it the right price? So are you paying the right price for it? And number 2, is it structurally sound? So, are there any structural issues? Are there any damp issues? All the lender really cares about is their security. So what we're looking for here, what they're looking for is that, is our money going to be good on this property? Okay? And that pretty much happens in the background, which is step number 6. So we're doing all of that in the background. So the client doesn't really see any of this. We're also chasing the lenders up to make to get things moving quickly, as well as the protection providers to make sure that they're getting everything ready as well on the life insurance policies, for example. Then we move on to step number 7. I have to put my fingers there for a minute. Right, step number 7 is when the mortgage offer is now issued. Okay, at this point, the banks have checked everything, they've looked at your paperwork, they've looked at the survey, and they're like, yep, we're happy with everything. Now they issue you the full and final mortgage offer. So do you remember what I said in step number 2, we get the mortgage agreement in principle? Well, now at step 7, this is when we've now got the full and final mortgage offer. Okay, so that's when the banks have checked everything and they said, yep, we're good to go. Okay. At this point also, we'd like to think that the protection providers who we might have applied for life insurance to would have also issued acceptance terms on any policy that we might have applied for, whether it be life insurance or critical cover insurance, etc., etc. Okay. Now, we then move on to step number 8, which is the 4th time we meet the client. Now, we always say 4 times is really the kind of ideal number. The minimum we want to meet our clients is 3 times, but there's no restriction. Some clients, in fact most clients actually, see us more than 4 times. Okay? But 4 times is the preferred number of times to meet. And the reason why we do that is because there's so much to get through. If we went through all in one go, it would just be too much for any person. And that's not with respect to anybody, it's just that obviously, for the most part, people aren't doing this day in, day out. Okay? So, in the step 8, 4th meeting, what are we doing? We're dotting the I's and we're crossing all the T's. So we call this consolidating. Okay? So making sure that everything that we discussed earlier on in the process of what mortgage we're going to apply for, the amount, the lender, the rate, the fees, the payments, etc., and the insurances, the payments, blah blah blah, making sure all of that fits into what's on the table now. Okay? So we consolidate in step number 8. Now, Obviously, in the background, as I mentioned earlier on, we would have been doing everything. So, from step 4, negotiating and agreeing the sale, to instructing solicitors, we will then be chasing the solicitors on a regular basis. We will be chasing the estate agent, the sellers, solicitors, the sellers, the lenders, the surveyors, insurance providers. We basically take care of everything. Okay, so as a customer, you don't have to do much at all. Okay, now step number 9 and 10, I'm going to explain in a lot more detail in a separate video, because I think they deserve their own video, because they are very, very important matters. But what will happen, up until step 8, everything is now ready. Your solicitor will then send you 3 documents to sign. Okay, your mortgage deeds, your contracts, and your TR1 document. Okay, you sign those, you go to your bank, you do a chap's payment, and you send all your money to your solicitor, including your deposit and the fees, after they've given you a completion statement. The lender, your solicitor will then will submit what we call a certificate of title, or we call it COT in our industry, where they request the funds from the lender to make sure that it comes in on time for the proposed completion date. Okay, and now we're ready to move on to step 9. Step 9, very simply, we exchange contracts. At that point, the 2 solicitors pick up the phone, exchange contracts. Usually, if it's done separately, sometimes you can do what we call a simultaneous exchange and completion, or often you'll do exchange one week and a week later you'll do completion. On the exchange, 10% deposit goes over to the other side. You are now legally bound. There's no pulling out. If you pull out as a buyer, you will lose your 10%, and your seller could sue you to recover any costs. That goes for you too. If they pull out after exchanging, you can sue them to recover any costs that you've incurred in the process. Again, this is why there's a lot more to it, a lot more legalities behind it. Disclaimer, we're not a lawyer, we're not solicitors here, but I want to emphasize this in a lot more detail, so we're going to hold separate videos, or do separate videos on exchanging contracts. And then finally, step number 10 is completion. Completion, as the name suggests, is where the deal is completed, transaction is done, got the keys, you move in. Simple as that. Okay. Now, I know there's a lot that we've gone through here, and I've taken my time explaining it. And this is exactly how I would explain it if I was speaking to a customer in person. I would literally give as much time, if not more, to explain to the customer what we're going to take them through, the journey that we take them through. Okay, but very simply, all they then have to do is we say step number 4, find a house, and step number 10, move in. That's literally it. Find a house, move in. We take care of everything else. Now, I understand not all brokers or consultants will work in the same way, but here at Pinnacle Finance, that's the way we operate. Okay, we offer a more exclusive, more personal service. Okay, our fee structure is reflected within there, of course, but we're acting as consultants and not just your everyday brokers. Okay, again, not taking anything away from any other consultant or any other broker, each to their own, not a problem, but this is how we operate. Okay, now in summary, I hope that's been helpful. I hope you've taken something away from that and it's been educational, whether you're new to the industry and you're a first time buyer, or whether you're already got a portfolio of property and this is a refresher for you. So I hope this has added value to you in some way. Okay, as always, if you have any questions, please feel free to get in touch with us and see how we can help you. Get in touch for your free, no obligation initial consultation. And all you've got to do is call the number below on 0800 799 9869. Okay, that's 0800 799 9869. I'm hoping I'm doing that the right way around. I mean, you'll have to forgive me, guys. I'm not a YouTuber. I'm not a influencer. I mean, I'm doing these recordings and editing all on my own. It's actually quite interesting, quite fun actually. It's a new skill that I'm learning about editing and videos and whatever. But yeah, get in touch, guys. Subscribe, like, and comment. Any questions you have, anything you want us to talk about or cover in the next video. Appreciate it's been a long video, so if you stuck till the end, thank you. It means a lot to us. And see you in the next one. Take care. Bye for now.